U.S. natural gas futures fell about 2% to a two-week low on Friday on forecasts for lower demand next week and expectations power generators will burn less gas after Hurricane Milton knocked out power to millions of homes and businesses in Florida. That would be the first time the contract dropped for 5 straight days since late August. During that time, it was down about 12%. The average gas output in the lower 48 U.S. states fell to 101.2 billion cubic feet per day so far in October, down from 101.8 billion in September. Analysts forecast average gas demand in the lower 48, including exports, will rise from 96.4 billion cubic feet per day this week to 96.9 billion next week. Gas flows to the 7 big U.S. LNG export plants slid to an average of 12.4 billion cubic feet per day so far in October, down from 12.7 billion in September. That reduction was primarily due to the planned shutdown of Berkshire Hathaway Energy's 0.8 billion cubic feet per day LNG export plant in Maryland for approximately 3 weeks of annual maintenance, which could conclude as early as October 11. Meanwhile, U.S. energy firms this week added oil rigs for the first time in 4 weeks, energy services firm Baker Hughes said in its closely followed report on Friday. The total rig count, an early indicator of future output, increased by 1 to 586 for the week ending October 11. Nevertheless, the gas rig count is 1 rig down from 102 last week and down from 118 1 year ago. Much of the U.S. will be comfortable with highs of 60s to 80s besides hotter 90s across Texas, as well as cooler 50s over portions of the Great Lakes and Northeast as weather systems sweep through. Overall, natural gas demand is projected to remain low next week. Natural gas remains under pressure as traders focus on the consequences of Hurricane Milton, which has led to lower demand. From a daily technical perspective, bulls need to protect the $2.48 support level. If it does occur, there's a likelihood that the market could target the $2.60 level followed by a retest of $2.70 as the next likely target. On the contrary, a sustained move below the $2.45 next week would indicate increasing short-term selling pressure, with a retest of $2.40 as the next likely target. The 50-day moving average at $2.36 will serve as the main support and an attractive entry point for potential buyers ahead of winter. Please like, subscribe, and comment to support the channel. See you in the next one.